This is a US-listed AI stock trading under $2, and it's already being used inside real smart city surveillance and public safety systems. Not as a pilot, not as a concept, but as live infrastructure. And that alone should make you pause, because most investors still think AI is just software chatbots or expensive mega-cap stocks that already made their move. The reality is that the next phase of AI adoption isn't happening on social media feeds or inside flashy apps. It's happening quietly inside cities, traffic systems, public safety networks, and urban infrastructure that has to work every single day. And the companies enabling that shift don't look exciting on the surface. They look small, underpriced, uncomfortable. Exactly where asymmetric opportunities usually begin. Most people assume that if a stock is trading under $2, something must be broken, and most of the time, they're right. Many penny stocks never recover. They dilute shareholders. They miss execution. They disappear quietly. But that's also why expectations at this level are so low. The market is already pricing in failure before success even has a chance to materialize. As of late December 2025, this stock has been fluctuating roughly between 87 cents and about $1.38. Though prices move fast and should always be checked in real time. That range alone tells you the psychology the market is still assuming uncertainty, limited trust, and weak execution. And that skepticism is exactly what creates the opportunity. Smart cities aren't a future idea anymore. Cities are already deploying AI to monitor traffic, manage congestion, detect threats, analyze video feeds, and improve public safety in real time. Governments don't adopt technology for hype. They adopt it because it reduces cost, improves response time, and creates accountability. Once these systems are installed, they don't get ripped out easily. They become embedded infrastructure. Before we go further, a quick note. This video is for educational purposes only. Nothing here is financial advice. Penny stocks are speculative, volatile, and risky. Always do your own research and verify live data before making any investment decisions. This company focuses on AI-powered video analytics and infrastructure software designed for large-scale environments. Think city streets, traffic intersections, transit hubs, campuses, and government facilities. The platform combines advanced software with proprietary hardware, including a 360-degree anti-warp camera system known as Evada 360. That hardware is designed specifically for wide-area urban monitoring, reducing blind spots in high-traffic environments while feeding clean data into AI analytics systems. This isn't consumer AI, it's operational AI, the kind that doesn't get attention on social media, but quietly becomes mission-critical once deployed. Cities care less about buzzwords and more about reliability, coverage, and response time. That's where this technology fits. One of the biggest risks for small public companies is listing stability. As of November 26, 2025, this company officially regained full compliance with Nasdaq listing requirements. That may sound boring, but it's a major credibility checkpoint. Nasdaq compliance signals operational discipline, reporting standards, and reduced delisting risk. For many institutional investors, that's the difference between ignoring a stock and finally being willing to watch it. Now, let's name it. The company is Evada Solutions, trading on the Nasdaq under the ticker IVDA. At first glance, IVDA doesn't look impressive. It's small, coverage is limited, the stock is volatile. But those traits are exactly why the gap between perception and potential is so wide. And gaps are where returns come from, not certainty. One of the most overlooked developments involves international validation. IVDA is part of a trilateral agreement involving the Arab Organization for Industrialization, a state-linked industrial entity in Egypt, along with regional technology partner Zerotech. Agreements structured at this level don't happen for hype. They happen when systems meet procurement standards, security requirements, and long-term operational criteria. Analyst projections add another layer to this setup. At least one analyst forecasts IVDA's annual revenue reaching approximately $166 million by the end of 2026. When you compare that to a current market capitalization measured in just a few $1,000,000, you immediately understand why this stock keeps surfacing in serious discussions despite its size. That forecast is not a promise, it's a scenario that requires execution. but it explains why expectations and valuation are so disconnected today. We've already seen signs of changing sentiment. On December 1st, the stock surged more than 20% in a single session, and over a short period, it posted double-digit gains. Moves like that don't guarantee anything, but they signal that attention is returning. At this size, even modest positioning shifts can move the price quickly. Now let's talk risk, because credibility is earned here. IVDA has reported net losses, and like many small companies, it has raised capital through equity offerings. That introduces dilution risk. If adoption stalls or capital management weakens, shareholders will feel it. These are not footnotes. These are the realities of investing at this level, but there's a counterbalance. Infrastructure AI is sticky. Once deployed, switching costs rise, data accumulates, systems become embedded into daily operations. That's why cities move slowly at first and then stay committed once adoption happens. This is not a buy on forget stock, it's a watch list stock, a monitored execution stock, a risk versus expectation setup. If execution improves, contracts scale, and deployments expand, the current price will not reflect reality for long. If execution fails, the market's skepticism will prove correct. That's the trade-off. If you're only looking for confirmation, this video isn't for you. But if you want to understand how professionals think about asymmetric risk, expectation gaps, and early infrastructure adoption, this is exactly the type of situation they study. If you found this breakdown useful, take a moment to like the video and subscribe. It helps the channel grow and allows me to keep producing calm, fundamentals-first analysis instead of hype. This story isn't about headlines. It's about execution, contracts, and whether real-world adoption continues to scale. Watch the filings, watch the deployments, watch how capital is managed. Stay disciplined, stay curious, and stay focused on where real fundamentals are moving. Thanks for watching, and I'll see you in the next video.